Hey guys, how's it going? This is Tim, bringing you guys the Daily Deals with Tim, where I talk about the latest news and deals on cryptocurrency, all for you guys. And before I begin, this is my personal opinion and not financial advice. Now today, I want to talk about stablecoins and why MinexCoin could be the new stablecoin in this crypto ecosystem. Now, this article is an expert blog by this guy named Anatoly, and he basically goes on about one economist in the mid-70s called Friedrich August von Hayek, and he published a book called The Denationalization of Money and made an argument for competitively issued private monies, and that these private monies he trusted that the market would pick the best money for every occasion. And this kind of, if you think about it, it's talking about the cryptocurrency market because it's competitive. If you guys didn't know, cryptocurrency market is very competitive in that people want to pick the best coins that would increase in value. Also, they're, I guess, issued privately because there is some kind of decentralized network in issuing these cryptocurrencies, and they're money because they have value to them, and you could exchange it for fiat or other cryptos. So, and this competitive market would pick the best money for every occasion. And that said, Bitcoin is the king right now because it has I believe it has the most decentralized network. Even though it is slow and has high fiat times, the value keeps on increasing, which means that people is picking the best money for this occasion right now. Now, this guy died, von Hayek died in 1992, but we could apply his kind of methods to the current situation. And one problem that exists in cryptocurrency is that cryptocurrencies are volatile, which means that average investors are going to have a lot of trouble investing into cryptocurrencies. If you invest into a cryptocurrency and it goes down by 50% tomorrow, you're going to have some massive stress over it. Now, if it goes up 50% tomorrow, you might be happy, but you don't know what's going to happen tomorrow. If it's going to drop by 20, if it's going to go up by 20, vice versa, whatever it is. So this basically hurts the day-to-day practical implementations. So let's say you want to buy a coffee with a cryptocurrency, and one day you have enough money to buy coffee, next day you don't, maybe the other day you have double the money to buy 2 coffees. And this kind of volatility, it's good if you have money that you can afford to lose. So that's why I keep mentioning it. You should only invest an amount that you can afford to lose, because if you need that money, the volatility might change the amount or the value of it. But if it's an amount that you can afford to lose, if it's like your kind of part of your savings or part of your portfolio that you don't need on a daily basis, and you just let it keep growing, that might be a good way to invest. But that said, what we need in this cryptocurrency space is a stable coin. Now, there has been a lot of attempts at making this stable coin. And I don't know some of these coins, but apparently there's one called Koina USD, Nubits, BitUSD. I know Tether, but all these had a lot of problems. If you look at the charts, they're still volatile. And with Tether, there has been a lot of, I guess, conflict and conspiracy going on in that they keep on printing out new tethers. The auditing is not done correctly. People don't know if there's enough US dollars pegged to the tether, and there's tether hack of 30 million and all these problems going on. So I believe pegging cryptocurrency to a fiat money is a bad idea, because as the cryptocurrencies grow in price, the fiat stays the same, or actually it decreases in its price. So I don't know if that's a good idea. Also, there are cryptocurrencies that are pegged to different cryptocurrencies. I believe Bancor is pegged to Ethereum. So it's still going to have volatility of Ethereum on the Bancor crypto. And also DGX DAO, I believe that is pegged to the gold. So they have a gold reserve, but the gold compared to cryptocurrencies is actually decreasing in price. Just for if you look at the ratio itself, the price might stay the same or might fluctuate a couple percent each day, but as the cryptocurrency market goes up and up, the gold kind of stays the same. They don't have these kind of increases. So this article basically says that a stable coin is going to be a very attractive option for people. Because as you see these kind of cryptos going everywhere, back and forth, people want to invest into a stable coin where when they invest, they know that it's not going to drop 20-30% tomorrow. And I think MinexCoin might be fitting into that category. Now, as you can see, MinexCoin, basically, it says in their Minex Bank memorandum that the first 3 months is kind of gonna be like a test phase where they're not going to strictly implement that channel, the price channel of no more than plus or minus 5%, but they're gonna see how the market reacts to MinexCoin listed on an exchange available for the public. Now, as you can see, it went crazy up to, I believe, more than $70 at one point. From $1 or $2 just in a span of a month. That's like 70x increase, maybe less, but so as you can see that if they don't do anything about this, the volatility is going to happen over and over again. It's gonna go up and down, might go crazy high, crazy low. Now, if they didn't do anything in this situation, you might have seen the $70 go to maybe $5 or maybe back to the $1. Because if there is no reaction from the Minex Bank, then the volatility can go really high and really low. And that is what you see with a lot of the top, maybe the coins out of the top 100. We sometimes see this because they have ridiculous inflation rates. Some of the high proof of stake coins, they basically go really high at one point and then they drop to like 1 Satoshi or a couple Satoshis. And you don't want to see that, but they have a Minex Bank. It's kind of like, it works like a centralized bank, but they don't hold on to your fund. You hold on to your fund and you make an account with them with your public key, and you basically park your coins, basically leave it on your wallet for the set amount of time, and they give you interest rate based on that. And that interest rate changes based on the price of the MinexCoin. So when it went really high over here, the interest rate dropped significantly so that it would incentivize people to sell. And when it went really low right here, they kind of upped the interest rate so that people have more incentive to buy into the coin and park it. And currently, as it's going up, they reduced the interest rate again, or the parking rate again, by around, it's different for daily, weekly, monthly, and yearly, but so they are adjusting to it. And as you can see, the overall growth pattern of MinexCoins kind of going up in the straight line. There are, what would you call these? I forgot this term for it, but there are outliers in that it goes up and down really crazy. But given that they only been existing in the space for a month now on a live exchange, I think this can happen. We might see a little more of these kind of actions, but as the months pass, as 2018 hits, and we continue to progress, I believe this action will kind of die out and we'll have more of a stable pattern upwards. And the thing is that their annual growth is pegged to the top 10 cryptocurrencies. It's not only pegged to Bitcoin, because if it was, it can drop as hard as Bitcoin drops, which is they can drop to 30 to 40% within a couple days or weeks. They have seen over 50% drops over I don't know, I think span of a year from 2013 to 15 around there. So if it's just pegged to Bitcoin, it's probably going to be really volatile, but it's pegged to the top 10 cryptocurrencies so that even if Bitcoin drops, the other cryptocurrencies can still hold on to their price range. Now, there might be some times where everything drops, which I have seen probably last week or something, where everything was red, down like 10-15%. Then you'll probably see MinexCoin drop in that similar rate. But the thing is that they're trying to maintain this stable rate, stable price through the Minex Bank and the parking rates, so that when people, if there's too many buyers, then they want to reduce the parking rates to have more sellers. If there's too many sellers, they want to increase the parking rate so that people buy in to park their coins. And that's basically what they're going for. In their white paper, they list that volatility is a problem, and I agree that high volatility is one of the biggest disadvantages over Bitcoin and other cryptos, and that they think stability as an answer, which is because stable cryptos are a solution enabling merchants to enjoy the advantages of blockchain technology while keeping away from the losses from major price fluctuations. So if you have a stable cryptocurrency, it allows for more merchants to join in, because they don't want to join in a crazy volatile environment. For example, I believe this Steam, one of the game kind of library application, they are not accepting Bitcoin anymore because of the volatility of it. And the more stable cryptocurrencies we have, more merchants will join, and more kind of these companies and softwares will look into it. I believe MinexCoin can be one of those solutions. Now that said, just as a warning, MinexCoin is still a startup. It only began, I believe they probably started the planning stage maybe last year or so, but the actual ICO and launch of the product only began this year. So with any startups, this can go down anytime. Something bad can happen to the team, or there could be some legal problems that might drive the project to the ground. Now, this could be said for anything out there. Probably not Bitcoin, because it's a truly decentralized, but for any other cryptocurrencies out there, this can happen, especially with startups with these kind of early projects. Things can go bad. But that said, at least for me, this is simply my opinion, but I see more success coming in with this project than it failing. So I'm taking the risk to invest into this project, and I'm only investing amounts that I can afford to lose. So that even if this price goes down maybe 10 or 20%, that I'm at a loss, I could be okay, because I know that over the long term, I see this project growing into the future. Now, sorry for making this kind of long videos. I'll try to make my point in a shorter sense. But that said, thank you guys for watching. And if you guys like this kind of content, like this video, comment below what you think, and smash that subscribe button. And also, if you guys want to support the channel, check out the links below, and I'll really appreciate that. And as always, I'll bring you guys more deals on Daily Deals with Tim.